hand. Crypto lender Celsius hires restructuring attorneys, Wall Street Journal reports. I'm going to get a sip of water here out of another. Yeah, that's good. Let's get into this. Celsius announced early Monday it would pause withdrawals along with its swap and transfer products, citing extreme market conditions. Crypto lending firm Celsius has hired lawyers specializing in business restructuring to help it navigate its thorny financial situation, the Wall Street Journal reported Wednesday, citing people familiar with the matter. Lawyers from the Philadelphia-based Akin, Gump, Strauss, Hauer, and Feld LLP are working with Celsius, which at its peak held over $10 billion in client assets, the report said. Celsius took the dramatic step of freezing account withdrawals Monday amid the broader crypto market downturn. The company did not immediately respond to requests for comment. And obviously they are in a pickle because they have basically at this point lost a bunch of money. They can't allow users to get their money out, and there will be obviously a lot of different, probably class action lawsuits to go here. Regulations are going to be put into place. This is going to be used as FUD from the Fed to push you into central bank digital currency. But what's the real story? They want to blame cryptocurrency. But what is the real story? The real story is that you never had control of these assets in the first place. If you remained in control of these assets, this would not have been as much of a problem. Of course, we still do have decentralized versions of this that are experiencing issues, and that is due to liquidity, specifically between ST, ETH, and Ethereum. Let's get into that because we have Three Arrows here who faces possible insolvency after unforeseen liquidations. But what happens here that's different that happens with Celsius? The big key difference here is that Celsius is facing problems because they were taking users' money and doing all of this. Three Arrows faces this problem because they did not pay attention to the market and what was happening with the technology behind what they were participating in. Specifically, when we get into this, what we're talking about is the pairing of ST ETH with staked ETH and the fact that this ETH that is being represented as staked Ethereum doesn't actually have anything backing it because there are no withdrawals enabled on the beacon chain yet, and there will not be post-merge either, at least for some given amount of time that we're unaware of. If they keep delaying the merge, then my assumption is they keep delaying this staked ETH problem. So that is where this is coming from, and that can be done on a decentralized platform like, of course, Uniswap or whatever it may be, because you end up in a position where the market doesn't actually have it. It's a little bit better represented though, right? You can see it better on the chain. On-chain analytics are there. The investment firm has been one of the most vocal crypto market participants in the past few years. Dubai-based crypto fund Three Arrows Capital is facing possible insolvency after incurring at least $400 million in liquidations, the block reported on Wednesday. Three Arrows, popularly known as 3AC, was liquidated by crypto lending firms and is currently in the process of repaying lenders and other counterparties, according to the report. The firm's founders, Su Zhu and Kyle Davies, were two of the most vocal participants in the crypto markets in the past few years, making bets on non-fungible tokens and decentralized finance applications, layer 1 blockchain tokens, and cryptocurrency companies. Zhu seemed to address rumors on Twitter this morning, saying, quote, "We are in the process of communicating with relevant parties and fully committed to working this out," end quote, he said, without giving specifics. Tokens listed as investments on 3AC site include Ethereum and Solana and Luna. Prices of these are down 77%, 90%, and 99.7% respectively since lifetime highs as per CoinGecko data. 3AC's troubles come amid reports that crypto lender Celsius may be insolvent. The firm managed billions of dollars of user funds and may not possess enough capital to pay out investors. One of these strategies Celsius used involved the usage of staked Ethereum, a derivative tied to the Ether that lost its peg and could have caused contagion risks, as reported. Meanwhile, on-chain data suggests 3AC is selling its existing crypto positions to lower collateral requirements for certain positions. One of 3AC's wallets has a debt totaling $183 million, blockchain data shows. 3AC did not respond to requests for comments on the time of writing. And this is currently happening right now. Thanks for the $5 super chat. I'll try to copy that question out. Right here, Ethereum 1124.21, Lido 1053.30. We still have a depegging right now as we speak for Ethereum and staked Ethereum. And this is going to put these guys in a very, very rough position. And it only gets worse from here, right? Because once you start depegging, you depeg more. You can see here that the staked Ethereum is also down 3% to Bitcoin. So the other thing, though, that I wanted to mention is wrapped Bitcoin is sort of recovered. So this is good news. Bitcoin at 21,376 and wrapped Bitcoin at 21,289. I guess it is still depegged. It had kind of recovered its peg right before the show. Unfortunately, it's already depegged once again. It's not as bad as the staked Ethereum, but this does, obviously, it's the DeFi contagion. The staked Ethereum problem ends up translating across all of DeFi. This is something we need to pay attention to, and it's very, very, very risky. I want to make sure that we cover it, and we're going to be tracking it on this channel every day because we need to track it and make sure it doesn't get too bad, right? I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.